Amazon will soon allow its U.S. employees to work without a face mask and to go on paid COVID-19 leave, but only if they're fully vaccinated. In a message to workers shared with Reuters, Amazon said staff could work without a face mask if local regulations allow, and employees must be fully vaccinated by March 18th in order to get paid leave due to COVID-19. The online retailer attributed its policy updates to a recent decline in coronavirus cases across the country, rising vaccination rates, and public health guidance, calling it a positive sign for returning to normal operations. Amazon's COVID-19 protocols have faced scrutiny throughout the pandemic. Amazon is America's second biggest private employer behind Walmart, with over 1.6 million full and part-time workers worldwide at the end of last year. The retailer's paid leave change does not affect workers who have received a religious or medical exemption from vaccination. The company said unvaccinated employees without an exemption can take unpaid time off for a week of COVID-19 isolation.
Shares of Disney jumped on Thursday after beating revenue and profit estimates, and strong subscriber growth by Disney Plus showed it was closing the gap with market leader Netflix, clapping back to life investors' faith in the future of the 2-year-old streaming service. Disney Plus added 11.8 million subscribers in the first quarter as viewers signed up to watch hits like The Mandalorian, Black Widow, and The Beatles Get Back, and the company forecast stronger subscriber growth for the second half of the year than in the first half, a sharp contrast to Netflix's gloomy outlook last month, which sent its shares tumbling. But one analyst said a closer look at Disney's numbers showed that some of the boost in subscriptions were the result of an automatic bundle with Hulu Live, and that 2.6 million subscribers came from a bundle with India-based Hotstar, which generates about $1 in monthly revenue per user. Still, investors had more to cheer as strong attendance at Disney's U.S. theme parks added luster to its quarterly results. Revenue from parks, resorts, experiences, and products reached above pre-pandemic levels, more than doubling to $7.2 billion in the quarter. But Disney said it expects international parks to be impacted by the ongoing global health crisis for weeks to come.
Following days of protesters blocking a vital U.S. Canada trade route, the mayor of Windsor, Ontario on Thursday said police were prepared to physically remove them. Mayor Drew Dilkens told CNN that police near the Ambassador Bridge are receiving additional manpower to deal with the demonstrators and their trucks. Canadian truckers opposed to vaccine mandates first occupied the capital of Ottawa, and this week they began blocking the Ambassador Bridge, one of the busiest border crossings in North America. The bridge links Detroit to Windsor and is a major supply route for Detroit's car makers.
Never in my life have I seen this.
With the flow of traffic stunted in both directions, Detroit-based General Motors and Chrysler parent Stellantis said on Thursday they had to cancel or reduce shifts because of parts shortages. And the number of blockades is increasing. Protesters blocked a second crossing in the province of Alberta late on Tuesday and a third crossing between Manitoba and North Dakota on Thursday. The U.S. Department of Homeland Security has warned law enforcement agencies that a convoy of truckers protesting COVID-19 vaccine mandates could affect this weekend's Super Bowl in Los Angeles. That's according to CNN, which reported the agency as saying the convoy could arrive in Washington, D.C. in March.
It makes everything from trains to factory gear and wind farm technology. And right now, business is booming for Siemens in almost all segments. The German industrial giant says it saw a massive jump in orders over the first quarter. They were up 52% over the period, as demand roared back following a health crisis-driven slowdown. That saw net profits jump by a fifth to 1.8 billion euros, or just over $2 billion, beating forecasts. Chief Executive Roland Busch called the surge in business unprecedented. He says worldwide logistics problems and component shortages have spurred pre-ordering by customers desperate to get their hands on essential gear. The company now has a record order backlog of over $106 billion, and Busch says it will take a long time to work through that. Siemens continues to trim its portfolio of companies as it tries to focus on technology. Earlier this week, it said it would sell the mail and parcels part of its logistics business as part of such moves. Siemens shares were up around 5% by early afternoon Thursday.
Wall Street sank on Thursday after U.S. inflation data came in hotter than expected, but stocks turned sharply lower following comments from Federal Reserve President James Bullard, who said the 40-year high in consumer prices made him, quote, dramatically more hawkish, raising fears the Fed will hike rates more aggressively. The Dow dropped 1.5%, while the S&P fell 1.8%, and the Nasdaq finished down 2.1%. The seventh time this year the index lost more than 2% in a single session. Riverfront Investment Group's chief investment strategist Chris Constantinos said despite Bullard's remarks, he believes the Fed will opt to take things slow.
I think the Fed would still prefer to move in 25 basis point increments. They sort of have to walk this tightrope, if you will, between making sure they're not too far behind the curve as it relates to controlling inflation. But on the flip side, they also don't want to appear like they're panicking, that they're moving with a magnitude that's too high. And I suspect in the coming days, we're going to get more back and forth between some of the more hawkish Fed presidents and some of the more dovish.
Mega-cap growth stocks, including Tesla, Nvidia, and Microsoft, gave back some gains made earlier in the week, each losing about 3%. But U.S. companies continued to report upbeat earnings. Walt Disney was a bright spot as shares rose more than 3% after the company beat revenue and profit expectations on strong Disney Plus subscriber growth and higher attendance at U.S. theme parks. Shares of toy maker Mattel rose more than 7.5%, and cereal maker Kellogg gained more than 3% after both companies forecast full-year profits above market expectations.